Right now, the ASX is under pressure. Gold's been caught a crash, and everyone's asking the same question. Should you be selling stocks and buying the dip in gold? The answer is coming soon from our experts tonight, who are trusted by major media outlets in Australia, and will give you the key stocks you need on your radar right now to ride the next major opportunity these markets will provide. These opportunities don't come around often, so buckle up. We are Wealth Within, the brains behind Australia's leading accredited share trading education. I'm Philip Tortevsky, joined by analysts Janine Cox and Pedro Banales. Good evening.
Good evening. How are we?
Good to have you back, Janine, and the man's come back and joined us in the flesh. Welcome back, mate.
It's great to be back, but I kind of feel like the new guy.
We thought we lost you for a second there over in Taiwan,
You
but
almost
you're back.
did. It's a beautiful country.
Two arms, check his legs. You got two legs still?
Yes, still all together.
Look, as long as the brain's intact.
That's all that matters. All right, let's get straight into it. Well, the ASX is selling off stronger than we've seen in months. Gold has fallen heavily over the last couple of weeks. They're calling it a crash. So is it time to sell the ASX, Janine? I want to start there. We'll get into gold with Pedro in a second. This is the worst week we've seen for a little while, but I mean, before we get into those headlines in the media, crash, it's all over. What's happening with the ASX?
Isn't it funny how we all think as soon as the market starts to pull back and do something that it needs to do in order to keep going up, that they call the crash? You know, but it never ceases to amaze me that.
Yeah, but I mean, for investors, some might be thinking, okay, now might be a good opportune time to take some profits. Are you seeing that as the, I guess, likely opportunistic moment right now coming into Christmas, or you know, is the trend still intact, meaning that we're likely to get...
Good point. Yeah, I mean, the trend is still intact. That's the first thing, like Phil's alluded to. But the main thing is to just follow your rules. So everybody who listens to this show, we talk about having good rules to manage shares. Provided they have those rules, they're fine, they're protected. They don't have anything to worry about. And ideally, depending on the stock and the strategy that you've set, there are some that you'll keep holding through the dip because your rules will allow you to do it, and others you may have to sell. That's a reality of it. But why don't we go to the charts and explain that a bit more?
Yeah, we're going to cover off some amazing stocks to know how to ride that dip out, so stay tuned. But yes, please, the chart of the All Ords. All
right, now if we go to the chart, you can see that on the downside, if the market falls by about 6% to just below that 9,000 point mark and then turns around and goes back up, I'd say we're going to have the biggest rip-roaring rally that we've seen into 2026, you know, that we haven't seen for a long time.
Sharper than what we've had?
I think it's going to be sort of the same sort of degree that we've had. It's going to follow that angle up. We saw that happen if we just go back to prior to the GFC, you can see the same sort of thing happened here. It just kept getting steeper, going higher and higher. Now, that could very well occur here. Things are primed for that. We haven't seen the materials side take off yet. But if we get a greater correction, if the numbers start to really become concerning, so unemployment goes higher than what they were expecting, way higher, and we're going to show a chart on that later on. Also, if the inflation data accelerates, that could be a thing. But I don't necessarily see that those numbers are going to take off really quickly at this point. I think this is just going to be a normal market pullback. But the downside we have to consider, if we go back to the chart for a moment, the downside risk could be a little bit greater than that. I think I've said before, we could be back somewhere down around this 8.5% from the high. That's a real possibility if that happens. But what has to happen for that to occur? Our material stocks have to fall for that to occur. Our financials have to fall. Everything has to happen at the same time. Financials do look like they will come off the top a little bit before they take another run up. But the materials sector is not overvalued by any means.
Yeah, exciting times. All right, now moving on. And what about the gold markets? As we mentioned, all this talk that it's had its worst fall in over a year. It's in double digits. It's crashing. Time to sell or buy the dip in gold, Pedro. Now, I've not seen this much interest in gold since people lined up in the streets over the last couple of months. And now the panic is out that it's crashing.
Well, that's what happens when you buy in, you know, at a peak, and at a peak that we've been expecting for a while now. And you only have to look at the chart to know that it's not crashing. The price is still very much up. Now, the crash that they're talking about, you have to go to a lower time frame here on the weekly to really understand what's going on. And really, it's only down, if I put the price range change percentage tool here, it's only down around that 9%. Now, if people can't weather a 9% drop, then they probably shouldn't be in, in a certain market, like gold anyway.
Well, yeah, sorry, go on.
So I would say that this is not a crash. This is a pullback, and really it's the people that have bought up here and the ones that you've mentioned that have been lining up, outside of the ABC and trying to get that physical gold that are probably suffering a little bit now. But gold provides multiple opportunities for trading. This is a very technical stock, not stock. I'm so used to saying that, very technical market to trade, and really all you need to do is know some basic technical analysis, and you could do very well trading this. So at the moment, it's just having a natural pullback.
Yeah, all right. Well, I know we're going to get into a bit of a correlation with gold in a second, but I wanted to ask you this, because all the talk from a fundamental perspective is, okay, there's a crash, but for there to be a crash, what has changed in the world when it comes to gold? The environment for gold's been ripe for this run up in terms of, what we've seen with the falling confidence with the US dollar, with, all the other aspects surrounding that market. For there to be a crash, something must have changed. But when you look at the fundamental drivers of gold, has anything changed, or is it all the same and this is just a healthy natural market correction driven by speculation?
Well, it seems that there is some sentiment around China and America having these talks and finally coming to an agreement. So, of course, when it comes to commodities, they're purchased in American dollars. So if there's confidence in that market and the dollar is going to be used again, then obviously there's going to be more demand, and expectation of the dollar going up would be bearish for gold. But that's not what we're seeing on the chart, and that's that chart that you were talking about that we're going to get into now, which is the divergence between the US dollar index and the Bloomberg commodity index. Now we can see that the US dollar is actually trending down, whereas the commodity index is trending up, meaning that there's more demand for commodities, but there's less demand for the American dollar. And of course, they've just recently had a rate cut, which of course puts more supply of dollars into the market. So of course that's going to be bearish for the dollar. But we are seeing that convergence now. Commodity prices are starting to move up. So that means that we should start to see the US dollar start to move down again. So if that happens, that's going to be very bullish for gold. Yeah. And that could be the catalyst for that turnaround that we're looking for.
Yeah, fantastic. All right, well said. Now, let's keep it here and see which gold stocks are those potentials for that buy the dip opportunity. Janine, I'll start with you. What are we seeing with these gold players?
Okay, so the first one we've got up here is Newmont Corporation, and we know that Newmont took over Newcrest Mining, so we've only got a small amount of data on the chart here right now, but I mean, obviously this is going to be reflected in that gold price, and we've seen that come off, and you really want to be trading the sort of stocks that reflect that underlying price. Here we've actually seen an exaggerated pullback. So this is where, when they're talking about a crash in gold, they could be talking about a correction in gold stocks, definitely, because they call a crash as 20% when a stock or market falls 20, that's a crash. But it really depends on the volatility of the stock, whether that's so or not. And we haven't got a lot of history here right now to talk about that. But I think, like Pedro said, it's a natural, healthy pullback that we're seeing in these gold stocks, and it's just coming back to trend. That's really the thing that we're looking for. We want to see a natural pullback to the angle of the trend, or for the stock to start, or market to start accelerating the trend. And so therefore, that would mean if it does accelerate the trend, it could find support somewhere around 120 and then accelerate through that high. Then we'd be able to pick up that angle. But if it just comes back to the angle of the current trend, that just gives more opportunities for other buyers to come in.
Yeah, but how often do you see this? Like, I'm sure people would have been selling amidst this panic that happened over the last couple of weeks with gold, especially the ones that bought near the top. When you look at a chart, these are the things our students look at all the time. You look at that chart, you see the way this most recent week has unfolded. When you can clearly read what price is doing, I don't know, to me that looks like potentially we might be seeing a bit of a reversal. So are you in that train of thought as well? When you look at what's happening this week, a 20% correction, Are we getting close to a potential buy the dip scenario? Or, I mean, you alluded a little bit that you'd like to see a pullback maybe a little bit more. I don't know, where are you sitting on?
It's too early to say.
Okay.
We've only had 2 weeks down. So with that sort of volatility in 2 weeks, yes, that sort of raises the question, is this the top? We've all been talking about gold and whether it could have a pullback. But I think we really need to let Newmont have a proper test of that recent high. So it needs to pull back and then move up to test the high. Then we'll know whether it's going to be a much broader correction for the stock, or whether it's trying to create one of those sideways consolidations in the lead to another rise.
Yeah. Now, I'll get your thoughts on this one. If
Yeah.
you're holding, if you're buying, if you've already bought, does it look like a nice little pullback, or does this look like it's getting worse?
Oh, well, look, as a technical trader, you'd be licking your lips looking at this, because really you're reading what's on the chart, and that's really our edge when it comes to being that, doing that technical analysis. Now, what people usually get wrong is that they start to gain interest above these levels, and they start to lose interest down here. And this is where we can really benefit by reading the charts, because we can actually see the price action starting to find support, possibly that momentum line that Janine drew out there, and then starting to move up again. And that's where we get in before the masses get in, because when the masses get in, we've seen what happened just recently in gold. And you only have to have a look at the pictures online of people queuing up, buying gold. So really, that's our edge. I think that this spells opportunity. Just be patient, wait to pounce on it, and the time will come for gold.
Yeah, great point. Now, on that, as you saw, some of the techniques are in this book that we show on this show. It is How to Beat the Managed Funds by 20%. It is free. You just have to pay the shipping. The issue is it's almost run out. It's sold out, so you might have to wait a little to get the book. Still, please get it. If you want a book that Dale has published, go and check this one out. It is How to Accelerate Your Wealth. This one you do need to purchase, but we do have it in stock, so you can get something right now before Christmas. If you want the other one, as mentioned, just put the order in and you will receive it in a short while. Now, let's get back to the next stock, Janine, another gold player.
Yeah, and this is a really good one for traders to think about, because it's run so hard, so quick. So take a look at this. You can see here the rise, this steep rise on Northern Star Resources over recent months. Now, there'll be people out there who are holding this, who have gone through this dip thinking, thankfully the stock kept, turned around and went back up. But it could do it again, and that's the thing that you've got to be prepared for. So if you've got no rules, you don't want to continually go through this until the eventual bust. You've got to have proper rules to manage this. So, I mean, there'll be a number of traders or people who are doing this short term who'll be rubbing their hands together wanting to get those short term returns, but it's the investors or the medium to longer term traders that are out there that really need those good rules right now.
Yeah, and it's an interesting or very important point you said, because when you look at that, especially when you're talking about from that bigger picture, short-term traders may be looking or thinking very different to medium-term traders and then again, long-term traders, but it just proves what is a pullback or a correction to one version of trader is a different thing to another. And when you look at that, especially on the bigger time frame, that monthly chart, there would be so many that would have thought, all right, it's time to pull out on that recent big dip, only to, if they were educated, to know that, hey, you're selling into a correction, into a pullback, sorry.
And most people...
Not a reversal.
Most people don't even know what they are until they come to us. They don't know whether they're short-term traders or medium to long-term traders. Some people think that they're medium to long-term, but they say that and they've got no rules to manage it.
Yeah.
Others think that they're short-term because they're just taking a small bite of the cherry, jumping in and out without proper rules. But those people are not short-term traders because they don't have the strategy and they're not willing to stay in for that volatility and then jump out at the right time when the rules suggest. They're not prepared. I guess they don't have a plan. And what do we say about not having a plan?
Well, that's what it is. If you can't separate or know how to separate a pullback from a reversal, well, then that's something that I think you should go and start to explore, which is a very important part to trading. But that wraps up our first round of stocks. Don't go anywhere, because we have more amazing stocks to come, and in particular 2 which are showing amazing setups right now. But for now, it is time for that time of the week. Janine, your trending topic.
Yes, and it's in a favourite area of mine. Australian banks line up to report to the market this week. Will banks fall following the latest news? And what do we make of Westpac's profit result? which dipped despite 3 interest rate cuts, all while the bank has warned of rising unemployment. Westpac was the first bank to report, to be followed by ANZ, NAB and Macquarie this week. And Westpac CEO Anthony Miller took over at the helm in December 2024. Miller said he's focused on the relentless execution of our strategy and delivering every day for our customers, which sounds fantastic. Now, compared to financial year 2024, Westpac's net profit after tax was down 1% to $6.9 billion. May not have surprised everybody, but earnings per ordinary share were flat at $2.04. Full-year fully franked dividends were up 1% to $1.53, which often that's what investors are waiting to see, those dividends, and Westpac will pay 77 cents on the 19th of December. Now, it's not a great result, but it's not a bad result either, and we've got a new CEO. So is the concern about employment even important? The Bureau of Statistics shows unemployment rising, but still well below historical averages. So nothing alarming yet. And we are in an AI boom. So now let's take a look at Westpac shares. Well, we're on the chart of Westpac. It's been absolutely rocketing along like the other banks in the sector.
Doesn't look like a share price in trouble.
Doesn't look like a share price in trouble at all. It looks extremely well supported by the market. It's just coming up to test that all-time high. But look, I can say with Westpac, you can see these stellar rises that happen and then it does nothing for quite a while. It has a stellar run, then does nothing, another nice run, and then a pullback. Now, this is not a stock that you could trade over the long term and then just keep holding it. We've seen here a big decline, and that wasn't just COVID. COVID was this small pullback here compared to the onslaught of this decline which happened around the time of the Royal Commission. We've also seen banks fall in the order of 60% during a GFC. So banks are not immune from these pullbacks. Don't fall in love with the banks too much or the CEO, okay? It's about thinking, what is it doing right now? We're at an all-time high. We know the market's due for a bit of a pullback, so therefore there could be a bit of a sell-off in Westpac shares. But I think that regardless of whether you're looking short to medium term, and some strategies are short to medium term, and that's fine, take a profit. But if you're medium to long term, you wouldn't be deterred by this right now at all.
Okay, interesting stuff. Did you want to add any thoughts on Westpac?
Just wanted to add that they actually sold $21.4 billion worth of home loan mortgages to Pepper, and we're going to cover that a little bit later. So that's a big, big amount of money off their books at the moment. So I wonder if that's got something to do with the revaluation and what's happening to the share price today. But I do agree, on a technical note, it's at all-time highs. We are bound to see a little bit of a pullback before it keeps going. But remember, we were looking at this a while ago and we were seeing an interesting pattern unfolding. If we can just quickly go to the chart, when it was consolidating around here, I remember we were thinking there's a very interesting pattern that advanced students would definitely know about, and we were thinking that it was going to break to the upside, which it has done. So I just wanted to gloat a little bit on that sense.
Yeah, you can do that here.
You can let him. He's a newbie now, isn't he?
He's been away for a while. He might as well pick himself up again. Great stuff. All right, now if you want the skills to analyse stocks just like you've seen tonight, visit our website, wealthwithin.com.au. But now let's get back into our topic for the night and get into some more stocks that are looking interesting in these pullback type buy the dip scenarios. What have you got for us, mate?
All right, we've got another bank, and that's Judo Bank on your screen now. Monthly on the left, weekly on the right. Now, this is one that's fairly new. It came out, it IPO'd back in 2021. And of course, as with any IPO, it does fall afterwards, as with most. Not all, but most do. Now, let's measure that fall anyway. When it IPO'd, it actually fell around that, well, I think that's 1,000. It's just
It's top secret.
It's top secret, yeah, that's right. It fell around that 62%, but now it's actually in a very nice, healthy uptrend, and I think it's best to go to the weekly to really articulate this. Let's put a nice little momentum line here, and you can see that it is following that quite nicely. It's just bouncing along. It is coming back down this week. It's trending down, but if it does find support around that $1.60, I think that this one could be looking quite nice. And, just to further that support level there, we do have a nice support zone there at around that $1.50 where it has found resistance and support in the past and more recently support as well. And it did struggle to get around that level more recently in 2025. So I think that it is coming to a conjuncture here that could very well be the springboard for this one to take off. If you wanted to be a little bit more conservative, you could possibly wait until it gets above these levels here, around that, if I can just grab that, around that $1.80 mark. I would say that that's a little bit more of a conservative entry. And there is a nice little pattern unfolding here, which, I'm sure our technical traders are looking at it with, much patience. So any breakout to that upside, I think it's good. Any breakdown below that $1.50, I think it's going to be bearish.
Yeah, it looks good. I mean, and it's quite interesting because you see when people talk about the financials, they're stuck on the big four, and we see this with people that come to us all the time. They're looking at the big four banks and they're going, I'm not sure if there's an opportunity here, but there are more than just the big four that are floating around on the ASX, and some of them might now, in the light of the environment that we're in, we've seen the US going down that easing cycle. Yep. Potentially, if we start going down that route, some of these ones might get a bit more love.
Yeah, exactly. Being a second-tier bank, a lot of people are going to be asking for loans from, Judo, Pepper, things like that. So definitely one to look for.
Yeah. All right. We've got another one coming up. Janine, what's next?
Yep. Okay. Bank of Queensland. I've actually been looking at this with a bit of interest. It's unfolded quite, I would say it's abnormal for where I was expecting Bank of Queensland to go. So it's actually defied the rest of the trend of the banks at the moment, which is a bit of a concern if people are holding it. But look, in the short term, if we're looking at the angle of this trend, this more recent trend that's come up, it's just coming back to test that trend. If it continues to fall away, of course, I'd be quite concerned about it and whether it would come back to test this low at 618. But this, for anyone who's now watching it, this could produce some opportunities going forward. I think obviously the resistance around $8, and it's got away from itself a little bit too quickly here to get to $8, but I still see Bank of Queensland heading back above $8 once we go into that next swing up in the market over the next year or so. I'd expect Bank of Queensland to be up here challenging these highs. I think the challenge is for competition in the market that Bank of Queensland's in. I actually think that Bank of Queensland could benefit from a rebranding. That's just my view on the side.
Yeah, all right, the stock looks good. Is it a buy the dip scenario right now, or as you mentioned, just wait and see? Definitely don't buy right now because it's just taken out this low. So this is where risk has increased because the trend down is continuing. So you just be patient and wait for the lower risk time. Yeah, and get that confirmation, which again, we do teach here. So please go check the website out and have a look at those trading courses. They will teach you specifically what is the difference between a fall and a reversal. But Pedro.
Very important.
Next stock.
All right, next up, we've got QBE. So another one in the financial space. This is actually an insurer. Now, the trend is very well up, and that's one thing. I'm going to give out a little secret here, is that you do want to, in a buy the dip scenario, you want the stock to be trading up beforehand.
Trending.
You need it to be trending, exactly. That saying the trend is your friend definitely applies to this scenario because if it's not that, then it's not buying the dip. If, like, for instance, back here, when the stock was just trading sideways, yeah, there's some trading opportunities, but it's not really a buying the dip opportunity. These are the buying the dip opportunities here while it's doing that uptrend. So let's draw out a nice momentum here from that low. It is traveling quite nicely above that momentum. We could expect it to come back down to possibly this level here. It actually anchored on the wrong one. So I'd say around that $8.50 is looking like a possible scenario since it does, align here with that momentum. So there I would be thinking there is a buying the dip opportunity. But again, you wouldn't just blindly buy just because it falls to that level. It could very well just break that level and come back down. But this is another one that will hold for interest rate cuts. If there's an interest rate cut, then this one should do well. whereas if not, then we could expect it to keep falling. But again, it's not always about fundamentals. There's a lot of technical aspects when it comes to stocks that people should know. Sometimes you think, well, why is it falling when this is happening? Why is it rising when that's happening? Sometimes
point.
it's a leading indicator rather than lag.
Well, yeah, markets project on future value. We've spoken about Tesla so many times about how that stock's been in the dumps media-wise, yet almost attacking all-time highs. But let's not go there. Next stock.
All right, now we've got Capral Limited. This is manufacturing and distributing fabricated and semi-fabricated aluminium-related products. This looks really nice. If I wasn't looking at that weekly chart, which is a bit erratic, if you just focus on the monthly chart, this is the thing, until you come to us and learn how to do this, on a monthly chart, you were really missing a huge part of what could actually save you time and a hell of a lot of money, because a monthly chart actually gives you the bird's eye view of what's going on. So if we come back to this chart of Capral Limited, you can see there that while it has some huge volatility, you don't really see it as much. So you don't get as stressed. Let's say for someone who's new and learning in the market, one of the biggest things is the confidence and building up your confidence over time. So we hold your hand through that process and until you get over those stumbling blocks. And so if you were trading a stock like this, at this point, and you say you bought in here and it dips down, you would be thinking that the stock was going to fall away, but then it turned around and went back up. So we've got a number of things that we would teach you to put on the chart so that you would be quite comfortable in knowing what the direction of that stock is going to do in the short and medium term. But right now, it's still part of a sideways move, even though it's looking good. I would say if it falls below last month's low, then I would just watch really closely. And of course, that line in the sand, that black line in the sand that I've got there now, as the stock starts to move higher, you want to lift that up. So we've got it underneath this outside bar at the moment, which is in July. But as long as it holds above that July low, I'm pretty happy with this stock. It looks really very nice, and even despite the volatility, it looks like it's changed personality from what it was, prior to COVID.
It's an interesting stock, and it's in an interesting space. And, to guess, if I was guessing right now, I would think a lot of those people out there in the forums, on the hot copper forums and whatnot, they'll be looking at a stock like this, but then purely buying it off, he said that, she said that, the owner or the CEO said this is coming. But like you said, being technical with these stocks, it's not only about being technical with the high end of the market, you can apply all these tools that we do teach to these kinds of stocks, but just by looking at the right angle and the right perspective. And these are the ones that really fly when they get going. So it does look interesting technically. If you are out there, on those forums and looking at stocks like this, then we can really give you some good help when it comes to the technicals. Did you want to add something on this, mate?
Yeah, don't listen to Roaring Kitty, about GameStop or anything like that, because that's a perfect example of, buying on the forums, and then unfortunately a lot of people lost their coat in that trade. By learning technical analysis, definitely you can get out. But this looks quite interesting. I'd say that if the stock holds up around that $9.80 that you've marked there, Janine, I think this one could definitely take off, and an upside to that $20 could be on the cards.
Yeah, and in terms of the space, aluminium, I know we're going to get into it in a second, in terms of some of the China and the US truces that have happened and how that's going to affect some of the commodities. But aluminium's one that not many people are talking about, but like copper and gold and silver, could be the next to really go for a big run.
Yeah, it's quite in demand at the moment,
yeah.
And it's not easy to make. So definitely being in that space, this one along with S32 could benefit from that.
Yeah, fantastic. All right, now before we get going on to the next part, what is your favourite? One each only, Janine, please. One.
I'd say the last one.
All right.
Yep.
Oh wow! Wasn't expecting that.
Jeez.
Yeah, right.
It's the reception we're getting here for everybody.
That's good. With the cowboy hat on.
Yeah, excellent. Pedro?
I would say it's a tough pick. I'd say between Bank of Queensland.
One.
Bank of Queensland.
All right, fantastic. All right, now moving on shortly, we're going to get into some massive news that came out today about one of Australia's most exciting new lenders. As Pedro mentioned, it has massive implications if you're holding this stock or looking to buy, so stay tuned for that one. But first, let's answer your questions. Now, Jack writes, now that China and the US have agreed to a truce, will our rare earths and materials stocks start to fall? All right, Pedro, I'm going to go to you on this. This is a good question. And right in asking, will there be concerns in terms of what's happened? Because I guess to paint the story, what's happened is China and the US have been speaking. They've decided or agreed to ease some of the tariff and restrictions they're putting on each other, one being the rare earth stuff. But what is likely to come? Is there likely to be a significant impact to Australian rare earth players or not?
Well, I mean, you only have to refer back to that $8 billion deal that we made with America to know that, there is going to be a high demand still for our rare earth players. And I think the market has overreacted a little bit. I think it has been a retail-driven rally and possibly a institutional sell-off, as usually happens, or it could be a retail sell-off as well. But there's going to be demand moving forward. And also, we can't forget that China buys our raw rare earths as well to process. I mean, they're the biggest processor in the world, but they still need to buy our raw material. So I don't think that this pact does anything negative to our rare earth. I do still think that it's long-term bullish. And I'd still be keeping an eye on those big ones like, LYC, Iluka, Australian Rare Earths and so on. Yeah,
they've made it obvious that, hey, America is looking for an additional source, let's put it that way. But anyway, let's move on. Aaron's email is next. JB Hi-Fi is now down 15% from its high in August. I've been invested in since 2023. Do you think it's likely to experience a Santa rally this year? Janine?
Look, it's just an incredible trajectory that this stock has run on, isn't it?
Is it sustainable?
Well, I think the pullback we're seeing now is showing no, it's not sustainable. And I think that JB Hi-Fi is going to come back to the angle of its trend. It's as simple as that. We're going to see something like that happen, possibly below $100. And I think the market gets a bit funny about this psychological resistance level of $100. You can see when it went through it the first time that we saw a pullback around sort of $80 $83, $84. So it's not out of the question for JB Hi-Fi to come back somewhere between $95 and $100. All that could turn this on its head is coming up with the November sale. So that Black Friday sale is just something that could completely spin the direction of JB Hi-Fi if they hit record numbers.
Yeah, and I mean, just your thoughts on this, Pedro, because again, it's one of those scenarios. A certain type of trader would be looking at this and saying, well, you know, there's an opportunity. It's just a pullback. Some may be thinking, okay, I'm looking to get in. I've already sold. When you look at JB Hi-Fi, and I know this is a stock, I mean, when we went to that microcap conference a year ago, it was there was a group out there, you know, really liking a stock like JB Hi-Fi from the fundamental perspective, but not realising that even so, this experiences moves up, moves down, can experience big sideways periods as well. So at some point, does this get a bit expensive, if you will? And, you know, technicals will really show you whether we're just getting a pullback or stay away.
Definitely. What we often see with stocks is that they overshoot fair value and they undershoot fair value. You know, those are the discrepancies that we're looking for as traders to be able to capitalize off. So obviously you want to sell when it's way over the value, and you want to buy when it's under the value. And we use technical analysis to do that. And at the moment, this is proving that it's coming back. It's snapping back to what is perceived as fair value. And I think that trend line there could be a possible next support level there, you know, as that pricing rise has been, you know, been evident since, you know, 2023 basically. If it does break that trend line, I could expect a deeper pullback, possibly to that around that $80 level. I know that that's been quite strong, but to your point, Phil, I think that there was opportunities to get out of this right at the top. Yeah. And as a trader, if you want to just take short-term profits, you can do that. You don't need to be holding these stocks just because you're thinking that it's good or it's going to come back up. There was two rules there that I can see that a short-term trader could have got out on.
Yeah, great point. All right, well, let's move on. Next is George's email, and he writes, I recently listened to one of Phil and Pedro's podcasts and want to know some more on why they said they think over the next decade the best traders will be the retail traders. Now, I think he's talking about one of the podcasts we covered. We do our podcasts, they're all over the place on Spotify. I think one spot, Talking Wealth is the name of the podcast. And we were discussing how the gap between retail and institutional traders is actually getting smaller and smaller, and that is because of the information now available to retail traders. And a lot of retail traders out there, or people out there looking to get involved in trading, don't understand that now the access to information is almost just as good, and to platform and to speed and to instruments and all that kind of stuff, trading conditions. So there is this thought, and we're already starting to see with some traders that over the next 10 years, the best trader in the world might be the kid in the bedroom doing it from a $500 computer with a normal broadband internet.
Absolutely. It actually reminds me of the medieval times where only a few people were allowed to read. Only the people, in the castle were really allowed to read. And then the education expanded, and more people got access to education, and then everybody was able to come up. It's exactly the same with technical analysis. Once you know how to read, then you can do this out of your bedroom. You've got access to all the information. You don't need any special machine like they did in the 50s, that special ticker machine that they had to buy for $20,000. You don't need to be as close as possible to the exchange like you would have had to before. Everything is at your fingertips. You just need to know how to read the charts and know what fundamental data to look for. Yeah,
fantastic. All right, now time for our hot stock tip for the week. Pedro, what have you got, mate?
All right, so the hot stock for this week is Pepper Money, as I mentioned earlier. So before we get into the chart, take a look at this news that came out today. Today, Pepper Money announced that it, along with other members of the consortium, has reached an agreement to acquire RAM's home loan portfolio from Westpac. The portfolio is substantial, consisting of around $21.4 billion worth of residential mortgages. Now, one man's trash is another man's treasure, right?
Yeah, I mean, you did mention this stock earlier. It's a very interesting stock. It's now making its way into mortgages, which is, as you said, from Westpac Bank. We're seeing this slowly starting to evolve, and I think technology is one reason why. When you look at Pepper, is there anything else apart from that aspect that makes you look at this and think, hey, you know what? This isn't just a trading, or maybe it is, I don't know, I'll get your question. It's not just a trading stock for me right now. This is something that has legs to maybe evolve into something bigger over the next 3, 4, 5 years.
Yeah, I do think so. Now, I mean, in the story side of things and the fundamental side of things, it is a second-tier bank, and we do see a lot of home loans now starting to go to these types of banks. They're purely online. You don't see any branches or things like that, so they can keep their costs low, their overheads low, and that's the evolution now with banks. Everything is becoming digital, online now. Some people like it, some people don't. Some people like to go to an actual branch. I'm not sure about you, Janine. What do you like to go into an actual branch and talk to
sign the checkbook?
Somebody?
No, I definitely don't.
You don't? I'm the same. Just everything online, hand it over, and they take care of everything in the background, right? And that's the type of banks that are starting to come up now. Now, could this be a possible takeover target as well? That's another...
Well, that's interesting in itself, because I did a little bit of research and I've only just started really looking at this one, but I suggest you do the same thing. Whenever you're looking at a stock, apart from the big stocks on our market, always for these sort of second tier or smaller companies, look at who owns them and how much do they hold, because that can affect what happens on the chart. I read somewhere, and you'll have to fact check me, that KKR own, and they were an organisation that are behind some takeovers, and they've got a lot of capital behind them internationally. They own something like 60% of the stock.
Yes.
That's what I read. And
they actually joined to buy the Rams home loan. They were the other part of the consortium, so you are correct.
Which is interesting. So I always like to see, well, what's the, how good a deal was this for Westpac, and who got the better deal,
Yeah. Well, how
jury's
risky
still out.
are they? Are they subprime mortgages? What type of, what are we talking about here?
Well, look, my first guess is that given the timing that we believe where the market is right now, that we're only 2 or 3 years out from a significant high, and if that turns out to be, and you'll have to remember this down the track that we told you that if that's the case, this stock they're getting a section of loans at the wrong time. Look, normally banks are offloading loan books when they have to and they're desperate,
Yes.
right, to save, to put the buoyancy under the bank. But right now we're not seeing that. We're seeing strategic move by Westpac to offload these assets. So I still give Westpac a tick.
Yeah, well, it's not often they're going to get the worst.
But from a trading point of view, from a trader's point of view, this is a better one from a trader's point of view.
Also, okay, so your tip is more trading type environment. Let's go to the chart and have a look, Pedro. What are you thinking with this one? Is it that trader type approach right now for Pepper?
Yeah, I do think so. I think actually you could do multiple approaches on this. I think it's looking good short term, medium term, and long term. Let's go to the chart and have a look. Now, this is another one, much like Judo. I'll expand out the monthly chart, which came out in 2021, surprisingly. And it fell again, as with all IPOs, most IPOs, and it consolidated sideways for a long period of time here before starting to break out. Now, this is where patience pays off, and really looking at these from that technical perspective, because all you had to do was wait until it crossed above that $1.70 and then it was soft. Now, that's on the monthly. On the weekly chart, there is a very interesting pattern that has unfolded here. It's a pattern that we've outlined before. It happened on EOS, Electro-Optic Systems. That one went up like 400%. These patterns occur time and time again, and this is why it's so effective to be looking at these types of situations that are unfolding. Now, it has traded up. Currently, if I zoom into here, we can see that the close of this bar here on the weekly, it's currently pointing up. So I mean, today it is up around that 12%, I believe. If we go briefly to the daily here, or not, we haven't got the updated one, but it is up around that 12%. So I think it's trading at around that $2.40. So we have crossed that high of that $2.30. So that's promising in itself. So I think that there's a nice short-term trade. Watch out for this level here, I would say though, around that $2.30. If it is trading above that $2.40, it could be coming back for a bit of a pullback before then it continues back up. But I do like this. I think that this is on the very early stages of a long-term uptrend. Yeah,
it looks very, very interesting right now. And I know we were speaking off air as well about a company in a similar, not so related space, but like Zip. You saw a lot of, talk coming out around that one there. We do have a bit of time. How about we have a look at the chart of Zip and maybe compare and say, all right, let's have a look at what's going here, because yes, it is not in the mortgage space itself, but it is getting traction in terms of, eyeballs and movement. It has pulled off a little bit, and maybe talk a little bit about what we were, alluding to off air with this one, where this might be another interesting buy the dip type scenario. Yeah, this is one that actually gets talked up in forums quite a bit. This one is one of these kind of meme stocks, I would say. Another possible takeover target, possibly. I'm just not leaving that out. But this is one that actually has... It actually got a fair bit of a pullback once it traded up. So we're talking about that 70%, after it reached that low, only to now, trade back up. But it does look like it's getting back down to that level here at around that $3.60. Another one that's going to be dependent on interest rates, because obviously if there are interest rate cuts, then that's going to be more money in people's pockets. They're going to spend more. They're going to be using these types of services, and if not, then that's probably why there's that kind of bearish sentiment, because the market isn't really expecting a rate cut this year, possibly in December, but maybe not this year. But there hasn't been any negative news on Zip, surprisingly. They actually came out with a very positive profit. Yeah. Right. So it could just be some profit taking at the moment. Technically, I think that the level to watch out for is at $3.50. But anyway, I don't want to hog it all. Janine, what are you seeing here on the chart?
Oh, look, I wouldn't argue with your downside risk. I think you're right, and that will be something to get excited about if it does come back to that point there. But I mean, the upside is huge, isn't it? I mean, we're just looking at Once it gets back through that high, we've got initially 40%, and then of course, probably more than that. It could go even 100 as a possibility once it gets going. But I just love the angle of these trends, and often when I'm looking at stocks, if it trends nicely, even if it's a stock that doesn't have the liquidity of, say, some of the biggest stocks on our market, as long as it's shown that the trend is really nice and it can, once it gets going, it actually is set, then that's great. This is breaking the trend at the moment, and that could reset things for a little while, but I'm not too concerned. Again, this has got a really good set of rules on it. If you've done your analysis on it, you'll know what that is. So some of our students have done that, and often people start off on stocks like this when they're at the bottoms. When they first start trading stocks in the market, they're trying to trade stocks that come off bottoms like this. And then, of course, at some point they will have sold it because they will have got fearful about where it's going, and yet, and then they walk away from it. They never look at it again. They're looking at the next shiny object, whereas one of the things that I'm really proud of that we teach our traders is to have that discipline to stay with their analysis. So they come back and then they look at it again and look at what they could have made. If we go back to the chart, they would have got the advantage of all of that rise there just by having been trained and having that analysis and the discipline to be able to be continually focusing on the stock on their watch list.
Yeah, and the reality is the meatiest part, the best part of any move is not right at that bottom where
That's
they're looking.
right, yeah.
So that's a whole nother topic that we might get into one day. But if you want more from us, check out our video, 3 ASX sectors set to boom in 2026. Bye now.